Nvidia saying it's going to invest $100 billion in OpenAI. It's sparking a global tech rally. Computing infrastructure company CoreWeave, which went public earlier this year, is just one of the many companies participating in that rally. It's up about 7% yesterday and another 1.25% this morning. If you take a look at it, that stock has been on a tear since its IPO earlier this year. Joining us right now is Glenn Hutchins. He is North Island's co-founder and chairman. He is also the lead independent director of CoreWeave. And Glenn, it's really a pleasure to have you here today.
Great to be here. Nice to see you guys.
You're somebody who wears a lot of different hats, a former member or director at the New York Fed. So we thought about starting with the economy. We've got a lot of things to talk about with North Island and crypto and the moves that we've seen there. But AI is really the story of the moment. And that's why I think we need to start at this position. What did you think of what you heard from OpenAI and Nvidia yesterday?
My immediate reaction, I wasn't the least bit surprised. My immediate reaction was this is the kind of scale transactions and scale balance sheets you're going to need to finance what's happening in AI. I've never seen anything so huge as this. When we started building out the infrastructure for semiconductors and hard drives and all those things 20, 30 years ago, had a very similar problem where you literally could not finance them in normal capital markets. You had to go to places like Singapore and Taiwan where they basically offered you their government balance sheet in order to get these things
that's
done.
why the buildup got so big in those
And
places.
very similar thing is happening today. And so it doesn't surprise me at all that this is happening because you're going to need balance sheets on the scale of countries in order to get this done, or the largest companies in the world like Nvidia. Now, when I was last year in this building with you guys, it was the day of the CoreWeave IPO. Yeah. And there was a lot of skepticism about the company's business model. And the IPO was a very tough one.
Which, by the way, for people who haven't been following along, this company builds data centers for AI needs.
Yeah, but the business model is highly innovative in that they figured out how to finance this huge AI build-out, which was to take the project finance framework, taking contracts for the offtake from the cloud computing facilities, matching them with financing that was matched to the cash flows for 4 to 5 years of the useful depreciable lives of the GPUs. And then at the end of that, the company CoreWeave owning a free option on the used GPUs. So that sort of project financing structure was one that people didn't really understand how CoreWeave was doing it, layering one contract on another. In the last several months, that's become the standard for financing these deals, and it's been adopted by peers and rivals all over the industry. And as a consequence of which, these companies are growing very rapidly. Street estimates, CoreWeave going to double its revenue this year over last, and is projected by street estimates to double next year. That's just the tip of the iceberg for all of the financing that's going in, but it's become the template for how this is being financed.
How concerned are you or not, though, long-term about how all of these businesses ultimately are financed? Because this is dependent on those GPUs being valued as an asset that is meaningful, that can be used sort of downscale. You use the more advanced chips for the most advanced stuff. These chips that'll be 5 years old will be used for less advanced processing and other things. At least that's the concept. Right. But nobody knows if in 5 years from now that those chips will have that value or not.
But you extract roughly 2 times your money from the chips over the 4 to 5 years of the contract. So they're fully depreciated and basically free, and you have an option to do with them if you want.
Right.
And you can look at all sorts of decline curves or similar types of technology products and guess at what you think those things will be worth. But they don't have to be worth anything for these things to work. Is the point. But the bigger question I thought you were getting at was, is all this infrastructure that's being built going to be able to be used profitably?
Yes.
I think
that's the bigger question, and the sort of bigger idea that in some ways you could look at this as vendor financing.
It is vendor financing. And by the way, it need to come from other vendors like Dell, but that's not unusual in the build out of something like this. Particularly when the vendors have these massive balance sheets that are needed to support the entrepreneurial economy as it grows. GE did it forever. IBM Credit did it forever. I mean, this is not a brand new tech.
GE financing ran into trouble at some point.
That was not because of this. That was a different story.
Well, you can go back. Look, Lucent. There were examples where vendor financing went off the rails, and people, when they were announcing these deals, people went crazy. The stocks went up and said, "Oh my goodness, oh my goodness!" And then all of a sudden, a couple years later,
the big difference between this, you mentioned Lucent. The big difference between this and building out the CLEX,
right,
is that those were, if you build it, they will come contracts. They went out and built massive fiber optic infrastructures, and nobody took the demand. Eventually, it got taken up. Now it's all taken up. In this case, these are backed. I said this is why the project finance model is important here. These are backed by 5-year contracts with people who are doing the offtake, people like Microsoft and OpenAI and Claude and Google and others who are taking the output of these contracts and are guaranteeing the payments. It's a very, very different kind of economic model. That's why each of them is, I think, coherent as a commercial building block. And that was the model that CoreWeave innovated that attracted me to the company. When I kind of figured out what they were doing. My favorite investments are ones where the market hates it. And I can figure out something I think is very unique about it and try to invest in it.
You said something at the beginning that I had not heard this analogy before, the idea that the foundries were all built in places like Taiwan because you needed a country-sized balance sheet to deal with this. Are these companies going to be big enough, or does the United States need to invest in this or risk losing it to other countries?
Well, so that's a very, very good question, right? The one thing we have uniquely in the United States is these huge capital markets that can fund a lot of these things. But I think we're going to need the largest sovereign wealth funds in the world to back these things. The largest pools of capital will have to be somewhere in the financing layers that will enable these large facilities to get built. Right. And that's what will happen. You have to balance sheets expressed at the national level. It could look more like sovereign wealth funds than like government funds.
Do you think with Nvidia owning a piece of OpenAI, does it change the dynamic with competitors? So
I don't think so. I don't expect. We don't know. This is just right now. It's a press release. But I don't expect either of the two actually do the compute themselves. I think they'll need to reach out to the CoreWeaves and other cloud computing.
No, what I mean by that is, let's say NVIDIA comes out with a next-generation chip. Does that chip get prioritized to OpenAI first for access versus Anthropic, for example? And does the Anthropic, or if you're Elon Musk and you run Grok, are you saying to yourself, you know what, I really need to find a competitor that I can use in terms of chips? The problem being, of course, that NVIDIA is the most advanced.
Yeah. That's interesting. The only relevant experience I have with that is that's what happens today at CoreWeave. In other words, we are the only company that can test these new chips at scale and prove them out before they get rolled out around the rest of the industry. And the reason why I say that is that's the major issue. You get a new chip, it needs to be tested in production at scale before it can be produced around. So it can be distributed around. So that'll be the major gating item, is who can do that, as opposed to who gets that chip.
But I think to Andrew's point, too, it's all these weird frenemies, relationships, and investments kind of changing on a daily basis, trying to figure out, is it ever going to draw government scrutiny about whether this is good or not? Although I would assume the Trump administration appreciates both NVIDIA's investment in OpenAI and the investment in Intel, because they're investing alongside the United States when it comes to Intel.
Look, I think the Trump administration understands what the Biden administration did not, which is that these are companies that make our nation globally competitive. And I think a light touch, a regulatory approach is appropriate, with the understanding the boundaries between these companies as are necessary. Yeah. But at this point, I don't see I can understand why people are looking at these things and saying, is there a little smoke or is there fire? I don't see any fire. I just see the people who are kind of creating all these capabilities having to use the combined financial resources to make them work. Right. And the scale of this thing is vastly bigger. It's like raising a teenager. You wake up every morning and it's bigger again than you thought the day before. The scale is just astounding.
And sometimes it works well, and sometimes it does not.
Yeah, exactly.
We didn't even touch on the energy issues. We've talked a lot about that this morning, too. We had Tom Fanning on earlier. Brian Sullivan was just digging through some of these things.
Fanning.
What are the limiting factors on energy, and do you think we will solve them and resolve them?
Good question. I'm not an expert there. There are other people who know a lot more about this. The thing I will say, if you look at these big contracts now, there are facilities that are out there that have the energy to them. So the near-term plan for the companies that are building these things out there is the energy. Is the energy, and that's kind of one of the reasons I think when OpenAI and Nvidia look around for who's going to do this for them, they'll find that getting the energy and getting the established data centers is most straightforward by going to the cloud computing community than trying to build it themselves. But then, so the energy problem becomes a next step problem. And I think my view is you have to have an all of the above solution. We need renewables. we need natural gas, we need to build nuclear. I think one of the great tragedies of recent American history was that we didn't build out nuclear over the last 30 or 40 years. I thought that was a big mistake.
Since we're throwing around headlines at you, I'm curious what you think of the H-1B visa situation as somebody who's spent a lot of time in the tech space and also in the policy and politics space.
So I would summarize it as a tariff for labor. And it increases the price of labor, which will mean in some cases, some types of labor will be uncompetitive in certain places, like some of these Indian outsourcing companies that are bringing people in who are making wages in the hundreds of thousands of dollars. This will be I'm not even sure, can't tell yet whether it's annual or one time, but let's say it's annual.
I think they said one time.
But then someone else said annual, so I don't know, right? But it'll increase the price of that labor. In the AI community, I don't think it really matters. It's a rounding error, given what people are paying for the talent in that space. But what it does, one reflection I will give you from the AI world is, I would say roughly 2/3 to 75% of the most important scientists I meet do not speak with an American accent. They're almost all immigrants. And I'm not exactly sure how this might discourage them coming to the United States for training and research, as opposed to working in some of these other companies. But I think it's vitally important for us to continue to be the place where the world's most important talent comes to do its work. And I don't know yet how this might influence that, but that's the thing I'd be most worried about.